Well, good morning, folks, and welcome to another edition of Friday Morning Live. Today is May the 1st, 2026. Who would have thunk that? Just seems like a few weeks ago we were celebrating a brand new year. But we're already in May, and we're less than 50 days away from this year's convention in June. So look forward to seeing each of you there as you come visit with us in June this year at the Gaylord. So let's kick this thing off. There's yours truly. Appreciate everybody being on, and we'll have our guest of honor today, Chad LaTour, in just a sec as we go through some housekeeping items, as I do each week on Friday Morning Live. Just a reminder: these are the education member benefits to each one of you on the call this morning. These are part of a 10-hour web-based course catalog. So get on the website on the education tab and find those courses, and you can take advantage of those as a member of the association. And then Jeff Odom continues to complete his AIAM designation series. You see the dates on your screen there. So hopefully if you're in the midst of that, you can finish those up. If you want to get started, certainly tune in to one of Jeff's. And then at the end of the month, you see the E&O class that Keith Jones is teaching. So, but yeah, you can get all that information on the education tab on the website. I just mentioned it. FAIA 122nd Anniversary Convention and Education Symposium. Long title, but a lot of good things this year at the convention, June 17th through the 19th at the Gaylord. If you've not registered, there's still plenty of time to do that. But rooms continue to be a little challenging. But if you need a room, please let us know. Certainly check with the hotel first. And then if you can't seem to find a room at the inn, as they say, let us know, and we'll see if we can't help you in that regard. But a lot of activity this year. The exhibit hall, the vendors, a lot of events that are going on, sponsored parties by the carrier partners that many of you represent. So look forward to that event on June 17th through the 19th. And as I said earlier, we're less than 50 days away from that event. So fun times. All right, let's, my mouse is kind of messed up here. Let's see if we can't get this squared away. There we go. Just a reminder, I know I said this earlier in the building, and our friend Kevin Mangan kind of told me to shush. But I've got to remind every folks, we're right at 30 days away from the 2026 Atlantic hurricane season, and just want to let you know, here at the association, there's plenty of resources. So as you're looking, I'm sure most of you have already done this, but if you're looking to update your guides, dust off some of your manuals, whatever, FAI has you covered from a variety of resources here at the association. It's all housed under the Disaster Command Post tab under the resources page of the website. But please, make sure a lot of that information is up to date, specifically your phone tree for your team, your contacts for your carriers, any information that you think you would need, certainly while you're at the office, and more importantly, when you're working remote after, unfortunately, if we get landfall on an event. So, but plenty to think about. I'm sure many of you are already doing that. You're in the prepared mode. We're less than 30 days out. So please, if you have questions, let us know. We'll be more than happy to point you to these items. But that is the resource here available to FAI members for the Disaster Command Post. And so, without further ado, we're going to switch over to our friend Chad LaTour. Chad, I'm elevating you as a presenter, so you're going to take it away. But many of you know Chad. He's been around the association for a while. He's certainly been a great resource for independent agents and specifically FAIA. But we want to welcome Chad, who is representing Flood Risk Solutions here today, and we're going to run through a presentation. We certainly encourage questions for Chad. He's been in this space for quite a while. And so if he can be a helpful resource to you, please let us know, and he'll be glad to do that. As you see on your screen, he's part of what we call here Independent Market Solutions. So, yeah, you already got a shout out, Chad, from David Thompson. So,
nice.
So, yep. But go ahead and put the next slide up, Chad.
Awesome. We good? Is it working?
Yep, I see it. Yeah.
Okay, perfect.
So,
well, thanks so much, Dave.
Yep.
I'm honored to be here and appreciate the opportunity. Good morning again, everyone. As Dave alluded to, I've been in this business a long time. In fact, going on 25 years, hard to believe. As you're talking about FAIA coming up, I'm thinking about, gosh, I've been to that conference almost 20 times in a row. So amazing. Time flies when you're having fun, I guess, right?
That is true, and as we go through this slide, I know there's some things here, but I'm just curious, Chad.
Yeah.
The company was founded in 2017. What drove you guys to get into this part of the business? To form FRS. What was some of the background of that?
Yeah, absolutely. Great question. So basically, we saw the need, and I say we, my business partner was the one that really founded the company. I joined about 3 years ago. So he saw the need in the market for a rater in this space. As we all know, it used to be NFIP, right? And now we have a plethora of private market companies. All started around 2014. We started seeing more and more private companies entering the space. So he took the initiative, and if I'm not mistaken, he may have been the first, if not at least the first 2 or 3, that came out with this concept of having a one-stop shop for all things flood, where you can come in and put in a little bit of information and get access to multiple private flood options. So it was designed to save agents a ton of time, going out to individual platforms and being able to come out here to what I'll show you in a few, a rater, where, again, you can see all these different options available. And, we have a lot of experience. Obviously, myself, I've been in the business over 20 years. My business partner's been in it at least 10, and we have a team that's been doing this for 8 years. All flood insurance. We don't do anything else. And as you can see here on your screen, we're not only writing in Florida, we write countrywide. So we can accommodate an agent writing in any state, residential, commercial, NFIP, private market, excess, parametric, you name it in the flood space, we're doing it. And we bring access, as you can see here on your screen, to over 30 different private markets. So, and the good news is, outside of parametric, all of our markets are lender compliant, meaning that they will basically satisfy the lender. So they're all A-rated, AM Best or better, and they all do at least what the NFIP offers.
Chad, you mentioned being able to write in Florida and outside of Florida. Is there a difference for what agents have to do to access flood exposures outside of Florida, to underwrite them? Is there a difference for agents? Or is it
there is. It's a really good question. So first of all, as far as accessing other states, we would just need a non-resident license.
Okay.
And then when they're writing in other states, obviously every state's different, right? And we all know Florida is very unique, but some states require a diligent effort for flood. In Florida, thankfully, they did away with the diligent effort requirement for flood, but that is still a requirement in other states. So with our platform, when an agent goes in and rates with us, the documents that are required by that state are going to populate. So the good news is if you're not familiar with other state guidelines, we're going to present the documents that are needed. So there's no worry on the agent's part as to, whether they're getting the correct documentation or not. Again, we'll supply that based off of the state.
Yeah. We got already a question coming in, Chad. Do you offer RCBAP, a ground up flood in Florida?
We do. That's always like the first question. So we all know RCBAPs are a challenge, right? Especially the high rise coastal. I'll tell you this, we can do RCBAPs on a primary basis, but they're like unicorns, just being fully transparent. Most of the time, they are getting a severe discount in the NFIP, significant, I should say. So if they're paying full risk rate, there may be opportunity there, but where we see more traction is on the low rise condominiums. And those are typically more inland, less exposure as far as number of buildings. I would say that 15 or less buildings is going to be what we're looking for. If it has more than 15 buildings, that's usually a no-go. So long way of answering, yes, we will rate RC maps on a primary basis, but very, very limited. Now, what we can do is excess on those condo associations and parametric, and we're seeing more and more of that, especially post Helene and Milton a couple of years back. And we'll talk more about that when we go through these slides.
Okay.
But I do want to point out real quick, there's two ways to submit business to our company. One is through the rater that we've been talking about, and again, we'll walk through a demo of that. But the other way, and that's for anything that doesn't fit on our portal, which would be like an RC BAP. Cobras are another great example. Something where you're looking for blanket coverage for multiple buildings, hard to place risk. Those types of risk can come directly to us, to this new business inbox on my screen here, or you can email me directly. I'll share my information at the end of this presentation. But again, there's, just because it doesn't fit on our radar doesn't mean we can't do it. So I always like to remind agents that, you can submit it directly to us and let us shop our markets and see what we can find out there for you.
Yeah.
We do have some proprietary markets as well as a cover holder. So we're always looking to place, the business with those carriers if we can. If not, again, we have access to several markets.
Yeah.
So I'm going to throw these up here real quick. And
Chad,
yeah,
why FRS? Why, how do you separate yourself from the other vendors in this space?
Yeah, exactly. And it's a great lead into this slide. So I know what people are thinking, like, gosh, I have all these different flood markets. Why do I need another one? Well, honestly, today, flood has changed significantly. There's, again, so many different markets out there. If you're not shopping the market, the competing agent may be shopping the market, and you may not have access to something he has access to. So with us, we're first of all bringing you up to 30 different private market programs, some of which are on the portal, some of which are manual. We also, again, offer proprietary programs, one of them being the preferred risk. And I think you guys will love to hear about this, and we'll talk more about it on the portal. But the PRP, you guys remember in the NFIP, there was a preferred risk program that went away with the introduction of risk rating 2.0. We've brought it back in a sense in the private market. This is not meant to provide full coverage. This is meant to provide some coverage to give them a leg to stand on in case they suffer a flood loss. These are going to be the clients that are low hazard, so they must be in an X zone, and they must have no prior flood claims history. If they meet those two requirements and the TIV falls in line, then they will get an offer of a preferred risk policy. And that's with residential only. It's not available on commercial, unfortunately. And the max amount of coverage is 50,000 building, 20,000 contents. Again, it's meant to give them a leg to stand on, not to make them whole. So this will make sense when I go through the demo of the portal. I'll show you how that works. Also, we have integration with PL Rater and Easy Links. Another big one is we shop the renewals. Not every renewal. We don't have the manpower to do that. That would be quite challenging with the number of policies that we have. But what we do offer is a review if it's an increase of 10% or more and $200 or more in revenue on that policy is generated. That allows us to be able to have a team look at those policies and make sure that your client's getting the best option based off of the carriers we have access to. So it takes the burden off of you having to shop flood, because we all know ever since the introduction of these private markets, floods become just like homeowners, right? You have to shop it, make sure your client's getting the best option out there. Also, we bring a lot of expertise in the large commercial and high net worth space when it comes to flood. Again, the quote binding and issuing all in one place on our portal. We also have a consumer quoting tool. This is pretty neat, Dave. This is actually something that the agent can share in their signature line. They can put it on their website. It's essentially like a skinned version of our portal for an insured or a realtor to utilize, where they can go in and run multiple quotes if they wish. If they want to bind something, they can. It will basically alert the agent. It all goes back to the agent that requests the quoting tool. So it will tie back to that specific agency. And then last but not least, parametric flood. This is really exciting because, again, I've been in this business so long, and it's nice to see, although it's been out a couple of years, it's still somewhat new, a new product, a new solution to the industry. Parametric's been around a long time, but it's really started to make a dent into the residential and commercial flood space. It used to be more of an agriculture type thing or large schedules, but now they've been able to really offer it to a small business, a condo association, and a residential client. So let's talk about parametric.
Well, let's go back one slide,
Go
Chad. I got a couple questions about that.
Yep.
Just for those on the call today, what do you all consider large commercial and high net worth? I mean, what is the threshold for those for those folks to understand that better?
Yeah, absolutely. So again, you can always start it on our system, but I would say that if anything that's 10 million TIV or higher would be considered large, whether it's commercial or high net worth.
Okay.
And it's something that we'd rather have a set of eyes taking a look at than just running it through the portal. But again, starting it on the portal gives us the information that we need to submit it to our offline markets anyways.
Okay.
So it's always a good starting point, and then they can either refer it from the portal if they don't get any options, or they can reach out directly to my team and we could take it from there.
Yeah, no, that's a great point. So folks, 10 million is the threshold for both of those in order for Chad's team to take those to the marketplace. So that's a good point. So parametric, this is, again, Chad, you mentioned it a couple times now, and we'll talk about it throughout today.
Mm-hmm.
It's kind of a misunderstood type of entity and providing coverage for certain risk. It's been around a while, but you all seem to have kind of put this out there and developed a good program around it. So tell us about how you all handle parametric flood insurance.
Absolutely. So one of our main partners is Flood Flash. However, we do have access to a couple of other markets, and you're exactly right. Parametric's been out a couple of years. It's essentially this particular product we're going to focus on today is sensor enabled. And what I mean by that is this device that you see on your screen. If you could think of this as like a piece of PVC pipe, it's really exactly what it is. But inside of it, it's like a cell phone. It's the easiest way to explain it. It has a 10-year battery life, and it connects to satellite, and it basically measures the depth of water, and it reports back the depth as water rises. And basically, the depth of water is the trigger that causes the policy to pay out. So in my opinion, I think parametric is easier to understand than a traditional flood policy, because something has to happen, which is the depth of water reaching a certain level in order for the policy to pay out. So I don't know if I'm oversimplifying it, but again, reading this policy versus a standard traditional policy, I think it's a little more straightforward. I would also say that parametric is not meant to, and this is just my own opinion again, replace traditional flood. It's more of an accompaniment to private flood or NFIP and filling in those gaps.
Yep. And
this is where I really see it taking off. And personally, I've quoted hundreds of these and written quite a few policies post Helene and Milton, because we all know after a flooding event, insureds and agents for that matter quickly learn that the NFIP, for example, doesn't cover many items. It's not meant to make you whole. It's meant to help get you back on your feet. Even private market, there's many private market programs that don't cover fences, seawalls, docks, landscaping. All of those items can be protected with parametric, because parametric can be used for anything that ties back to that property. So what we are seeing is not only associations looking into this coverage to, again, protect landscaping and docks and seawalls, but also high net worth type clients. We actually had one that dropped their private flood policy and just went with parametric because they were so upset with their carrier after Helene that many of their things were not covered. So they were like, you know what, it's not covered anyways, and we had a worst case scenario. At least if I buy parametric, and they chose an 8-inch trigger, now if the water rises again to that level, they're going to have the money that they need to recover. So the easiest way I think to explain this is to show you a couple of examples. So as I mentioned, the way this policy works is the device is installed on the side of a home, a building. It could even be a post as long as it's permanently affixed. And that device, again, is going to be typically, and this isn't a great example of it, but it's typically at ground level. This one they rose up a bit because this home is in the Keys. But it measures the depth, and as soon as that trigger, whether this example, they have 3 different triggers. So 24 inches is the lowest trigger here. So it would have to reach 24 inches before this first 100K would pay out. And what they decided to do here was in total offer 850,000 payout if all 3 of these triggers are met. So if the water rose to only the trigger 1 and trigger 2, obviously they would have 350,000 payout. If it went all the way above the 3rd trigger, then they would have 850,000 payout. So you could design this, whatever works for your client. You can even have multiple devices. So if you had a large commercial property, we see this with condo associations. They like to have one. I just did one where they put one by the tennis courts and then one on the other side of the property. So, there's different levels on these different properties, right? So again, we can actually consult with the agent, and we've even been on calls with the insured to help them pinpoint where they might want to place this, but ultimately it's of course up to the insured's decision to figure out where they want to put the device.
So Chad,
here's an example of a commercial.
Chad,
yeah, go ahead.
By having those at 2 different spots, you said the tennis courts and then another. So that means that there's 2 options there, right? That the insured could get paid 2 different levels depending on, like you say, the 24-inch, the 60-inch, whatever they decide, right? I mean, both of them wouldn't have to be triggered, is my point.
That's exactly right. They're essentially, when you have more than one device, they're separate policies.
Okay.
So think of each device as a policy.
Okay.
And this is a great example of a condo association in Fort Lauderdale. They wanted protection for their pools, outdoor areas, landscaping. So they went with 2 million. Let me move this thing over at 47 inches. So again, this is like going to be a significant catastrophe, right? To get to 47 inches. But we've seen this happen, and they wanted to have something just in case the worst case scenario happens, that they're going to have 2 million in coverage if we get some type of catastrophe like that. And that is not cheap. Here you can see it's 38,000. But again, when you're looking at the cost of traditional flood insurance, it makes sense for some of these associations, especially those that have had prior flood losses, which also brings up another point. If they've had prior flood losses, we're still able to get parametric. In most cases, I wouldn't say in all, but I've never had one personally that's been turned away. Obviously, it's going to price, based off of loss history, the trigger depth, things of that nature. But just because they've had prior losses doesn't mean we can't do it. So I would really encourage you to learn more about this coverage. I'm happy to jump on a call and take a deeper dive. But this is something I think that's going to be a game changer as agents become more and more comfortable with this. I just see it again as a great supplement to private flood and NFIP, and really giving folks the opportunity to fully recover after an event.
I think the other positive sign of the parametric too, Chad, is from the agents that we've talked to about this, is the speed of payment. And I know people get frustrated about NFIP and other flood programs, but it seems like parametric has really got the payment schedule down pretty significantly to help people recover. Is that been your understanding as well?
That's exactly right. That's another huge benefit to parametric, in my opinion, is that you don't have a claims process.
Yep.
The claims adjuster is that device. The trigger is met, the claim is paid out typically within a couple of weeks. Flood Flash's claim to fame is that they had a policy payout within hours. Again, it just depends on the situation, but 2 weeks is typically the max. In comparison to your point, NFIP sometimes can be a couple of months, sometimes even longer than that.
Or more. Many on this call know very well.
Yes, exactly. So, but good question. I'm glad you brought that up.
Yeah.
So as far as flood insurance versus disaster assistance, I just wanted to hit on this because, as you mentioned earlier, the H season is around. I don't even say the word. I think that we've had our fair share, so we deserve like 10-year period without storms.
Agreed.
I say that, although it's sad to say this, but it feels like even, only 2 years from Helene and Milton, we're already starting to see folks dropping flood coverage. It's just amazing to me how quickly we forget where we live and how exposed we are. But, sometimes these little events help remind insureds that, I need to keep this coverage. Because if you don't have flood insurance, your only other recourse is to hopefully get disaster assistance. So let's talk about the difference between the two. So flood insurance, obviously, you're in control because you're paying for that policy. Flood claims are paid even if a disaster is not declared by the president, which many people don't realize that it has to be declared a federal disaster before disaster assistance can be provided. A good example of this, Dave, is in Fort Lauderdale. They had, I think about 2 years ago, maybe 3 now, they had significant rain by the airport.
Exactly.
To the tune of about 28 inches, 30 inches within a 24-hour period. But that was an isolated event. So it wasn't declared a presidential disaster. So if you didn't have flood insurance, good luck. So it's best to have a flood policy in place. And then, of course, we've all been talking about this for years. David Thompson, I know he loves this one too. We've always said this in all the flood classes that, it doesn't matter what flood zone you live in. 30%, in fact, this number is probably higher now. 30% of these claims come from low-risk flood zones. So it doesn't matter what flood zone you're in, which is why NFIP doesn't really look at flood zone any longer as far as rating a policy, because flood maps are outdated and, floods don't know boundaries on a flood map. Like if it rains where you live, it can flood. So it doesn't, again, matter what zone you're in. Also, carrying flood insurance, you don't have the payback requirement, which we'll talk about in just a moment with disaster assistance. Excuse me. And of course, the ability to protect the full value of your home. Now, that's if you can get full value. Obviously, if you're talking NFIP, they're capped at $250 on the building. But private market, there's many private market programs that will go up to the full replacement cost. And of course, if you really wanted to, you could, again, like I mentioned earlier, add in parametric to fill in all those gaps. Now, let's talk about disaster assistance. So again, it requires a presidential declaration. They're not awarded in all flooding incidents. So just because you've had a federal disaster, you still have to apply for disaster assistance. And it doesn't mean you're going to get it. So the other part of this is, yes, grants can be provided. They're typically, on average, 3,000 to 4,000. They can be a little higher, a little lower, depending on the area. But most of the money that's handed out, which just never is what's talked about on TV, when these disasters occur, they talk about how billions have been given to the community to help them get back on their feet. But most of that is in the form of an SBA loan, and it has to be repaid. So now, if you don't have a flood policy, not only are you paying your mortgage for a home that's damaged, but now you're having to take out another loan and paying that loan on top of your mortgage. again, it just behooves your clients to buy flood insurance and have the protection they need. And then the last slide here is E&O exposure. I'm not going to spend a ton of time here. Everybody knows that we live in Florida. You have to offer flood. You're doing your clients a disservice if you offer it, regardless of flood zone, regardless of building type. It takes a couple of seconds to say, hey, flood insurance is available. Highly recommend it. Give them a quote. It's the best practice, in my opinion. Provide them with a quote. And if they don't want the coverage, have them sign a rejection. At least you have a leg to stand on. I'm not saying that that's a foolproof way of protecting your E&O, because we've seen instances where waivers have been signed and they still get sued. But in my opinion, overall, it's just a great practice to get in the habit of offering it to every client. Not only are you going to sleep better at night if there is a flooding event, knowing you offered it to your client, but also you're going to sell more flood, because we all know that if you offer it, your chances of selling it go up significantly versus not offering it at all. So these resources, I just want to share these with you. I think this is being recorded to share with everyone, so you'll have access to these. Real quick, FloodSmart, been out forever. You guys, if you haven't been on the site recently, I'd encourage you to take a look at the agent-facing site, which is agents.floodsmart. They have a new initiative where you can register. They used to have this program, but they've brought it back. You can register to be a referral agent. So if an insured goes out on the system and they run a quote, which they can do now, they can't bind it. They can run a quote on the floodsmart.gov site, which is the consumer facing. And then it will populate agents within that zip code that are registered that can help them in binding a flood policy. So there's also tons of resources, whether it's from an education perspective, marketing, campaigns, social media. So much information out there for you right at your fingertips at no cost to help you in selling and educating your clients about flood insurance. Also, the FEMA site, a lot of great information out there. The advocate for flood insurance is available through this portal here. You can find their information if you ever have a situation where you need help with a policy that you're not getting assistance from the WIO or the claims. Sometimes it's not an issue with the write your own or the claims adjuster. The insurer's just simply not happy, and there's nothing you can do. As a last ditch effort, you can connect them with that, the insurance advocate for flood insurance. And not saying that will get them anywhere, but at least it's a resource that they can go to. And then this Coastal Risk Live, this is really cool. Somebody introduced me to this, unfortunately, as Helene was approaching, and I live in the Sarasota area. So it was very eye-opening watching how in real time storm surge is changing as storms approach, as they gain strength. So this is something that you can share with your clients. If they don't have flood insurance, I can assure you if there's a storm out there and they're watching this, they're going to want to have flood coverage, because again, it really shows you how far that water can come in based off of the path and strength of the storm. So with that, this is my contact information, and I am going to jump into our portal.
Yeah, great. As you're doing that, Chad,
Yep.
folks, certainly if you have any questions, you can pop them in the question pane and we'll get Chad to answer them. But, a lot of those resources are good to have, to share with your clients, to have the rest of the team aware of those things. So as they're talking to clients about flood exposures and answering questions, they can certainly refer to some of these resources that Chad has outlined here today and many other things. So just keep that in mind as we go through this. A lot of this can be shared with your clients or prospective clients as you're talking through these exposures. So now, Chad, we're switching gears and we're going to go right into the platform, right?
Yes, you got it. And thanks for mentioning that, Dave. You're exactly right. That can only help, educate your clients and get them to understand the importance of flood insurance.
Yep.
We all know that there's a huge gap to this day, even after Helene and Milton. So many people choose to not carry flood insurance. And we as an industry have to do better and educating clients and help them understand the risk they face by not carrying it. So with that, this is our portal. I'm already logged in. For those of you that don't have access, again, reach out directly to me. I'll direct you through IMS on how to get set up. If you're already set up, this is a great reminder on how to write business with us. So I've already clicked new quote here in an effort to save some time. And at the top, you see where we have coverage type, primary and excess. Let me explain. So primary is primary competing with the NFIP. Excess would be if you were looking for excess over the NFIP. So let's say the client didn't qualify for private, the client wanted federal flood for one reason or another, but they're capped at 250, or on the commercial side, 500,000 for building. You can buy excess that sits on top of that, and we don't have to be on the underlying. You can rate excess standalone right here on our portal. We have 3 different companies that participate. We're adding a new one in the next couple of weeks. But I do like to point that out, that we do offer a standalone excess rater. As far as what you would primarily be doing here is quoting primary. And I've already answered again the question, so let me explain how this works. So you would answer these first 3. So the name, effective date, and we'll try to match as close as we can to the effective date, because obviously we have several private markets that have different waiting periods, which I'll show you on the next screen. And then you start typing the address. When you type the address, it will geocode it. You'll find it here typically. If it doesn't populate, just plug it in manually. But the majority of the time, it should find it. And then when you select the address, it pre-fills the rest of the address and quickly pulls in the flood zone, year built, square footage, number of floors, and construction type. So from there, you're only answering a handful of questions. One is risk type. So we need to know what type of risk is it, and here's the various types of risks that you can quote on the portal. And then if it's primary, secondary, rental, vacant, whatever it is. And then we need to know the foundation type. That data is not out there. So if you're not sure on the type of foundation, we have this little help file in here where you can quickly see the various types of foundations and select accordingly. The good news for you is you're in Florida, so 99% of them are slab on grade. I should say 99%, but a good amount are slab on grade. So other than that, we have 5 questions that appear here. Just make sure that they're answered accordingly. We default to no. So you want to go through these. If it has had a prior flood loss, again, you just answer the information. Depending on the amount of flood loss, you may or may not get an option online. So if you're needing an option that, nothing is showing here, again, you could refer it and we can look at offline markets. Oh, excuse me. We have several markets that will take prior losses, but I will tell you, if they've had a significant loss, and when I say significant, I'm talking about approaching or surpassing the NFIP, you're not going to find a private market, at least with the carriers we have, that would write that on a primary basis. Excess is a different story, but if it's not a large loss, then we may still find private market opportunities. Another thing to point out is it doesn't show it here. If it's in a COBRA or an OPA, if somewhere within the zip code there is one of those designated areas, then we do ask you to confirm if it is in COBRA or OPA. If you don't know, just answer no. I mean, at the end of the day, we'll find out with the carrier. But I say that just to point out that if it is in fact in a COBRA or an OPA, which is a coastal barrier resource area or otherwise protected area, if they build after the designation dates, they basically cannot buy federal flood. They can only buy private. And we have several options for those types of clients. So reach out if you come across that, and I'll assist you. And then last but not least, we have building replacement cost. This number is based off of the area and just logic we have built into the system. So this isn't a true replacement cost estimator. If you know this number is not accurate, then you can change it to the correct amount. And then the building coverage select limit is the amount of coverage that you're looking to quote. You have your different deductible options for building. And then moving down to contents, we default to 50,000 here. Change that to whatever the replacement cost is. And then, of course, just like in building, put the amount of coverage that you would like to quote. And again, different deductible options. And then additional living expense. Some carriers automatically offer it, but if you're looking for that additional living expense, you can put in a number here. I typically see 10 to 20,000. However, we have carriers that will go up to 100,000 on the portal. If you need something more than that, then we can certainly look at offline markets. And if you need help along the way, we have chat on every page in the bottom right-hand corner, or you can call us, the numbers at the top, or you can reach out directly to me. I'm here to help as well.
I was going to say that should say Chad, not chat.
That's Chad. I know. That's funny you say that. I said to my wife I should have Chad GPT.
Yeah, that's
right.
That's right.
Or flood. So after you answer those questions, and I did a lot of talking there, but literally in a minute or less, you can answer these questions, hit get quotes, and then all these options start coming back. So let me walk you through what you're seeing here. So this is, after I click get quotes, this is what populates. As I mentioned earlier in the presentation, preferred risk is an option that we offer with a max amount of coverage of 50,000 building, 20,000 contents. And the rates are the rates, just like it used to be in the preferred risk in the NFIP. So if they qualify, this is the rate every time in Florida with taxes and fees. We pay 20% commission on this product. Again, it's a last ditch effort for those clients that are saying, hey, I don't need flood. My lender said I don't need it. I'm not in a flood zone, which we all know everybody's in a flood zone. This is a way to get them, hopefully, to buy insurance, to have something. There is no co-insurance penalty, by the way, on this. So if this option is not available, it will simply say not eligible and you won't even see this. So again, this is only available for residential, not on the commercial side. And then everything else that falls below, these are all private markets competing with the NFIP. A couple of things to note. Sometimes you won't get rates that come back because they don't like the risk. They're not writing in that state, whatever the case may be. But I do point out, motion can be pretty competitive. The certain underwriters A down to Lloyd's of London C, they're not offering an option here, but typically they do. But they play more in the excess space than they do on a primary basis. And I point that out because we're always going to show you everything that we get back, regardless of pricing. So it's up to you, to look through what's available and offer, whatever you like to your client. So as you scroll down, these options tend to get more competitive down below here. We all know Neptune, so we do have access to Neptune. If you have a direct appointment, you can write it through us, or you can write it directly with them, jump over into their portal if they're the best option for you. If not, we have other options. In many cases, we can beat Neptune. Here's an option for $544, much cheaper. And this again is giving you the full replacement cost on these private markets versus the cap of $250 on the NFIP. And the NFIP for this risk is $529. So what's really nice about our portal here is that we give you the NFIP rate. Again, residential only, we don't do it on commercial. So it allows you to basically compare the NFIP to the private market very quickly and provide your clients with different options. So we got 544, which is just over the NFIP with much higher coverage. Another option down here for 735. And you can see based off of the carrier, some have the additional living expense included. If it doesn't show it, it doesn't mean that we can't offer it. Some of the carriers, their API doesn't pull through the additional living expense. So if that's something you're wanting and you don't see it listed here, use the chat and let them know that, hey, can you add 10,000 or 20,000 of additional living expense to this policy? And they can typically do it. And then the last thing I want to show you here as it relates to the different options is, let's say private market wasn't competitive. you can do what we call the NFIP plus excess wrap. This is the combination of NFIP and an excess policy. So this $1,300, it's two separate policies, one being the $529 for NFIP, and the rest, call it $1,200, is the excess policy to get to the full coverage required. Now, obviously, doesn't make any sense here because you have options in the private market giving you coverage up to the full risk. So it's just another option that we offer in case private market wasn't competitive. Then you have your different waiting periods here. We know that NFIP is 30 days, unless it's tied to making, increasing, or extending a loan. Otherwise, just like the NFIP, private market, there's no wait. If it's tied to a loan, if it's not tied to a loan, then you can see here 10 days, 15 days. If nothing is listed, like this Lloyd's of London, there is no waiting period. So the minute they make the payment, the policy goes into effect. And then you have a 7-day wait here, so on and so forth. And then finally, as far as submitting the business. So again, we're more than just a rater because we offer full support. So when you go into our system, you're rating it, you're getting the different options, and then you actually have the ability to bind it. Right here on our portal, if you click bind, these tabs up here will open up, sign, they electronically sign the documents, the agent, and then it will move over to the pay and issue tab. From there, you can send a link to your client for them to electronically sign. They can pay via the payment link we provide, or you can collect payment and pay on their behalf. Depending on the carrier, we try to do direct bill if it's available. Sometimes it is agency bill, but it will tell you when you go through the carrier or through the bind process. If it's submit for approval, you're submitting it to our underwriting team, typically the same day, if not the next day. They get back to you, let you know that everything is firmed up and ready to come back out and bind it. And this would change from submit for approval to bind. I do want to point out one last thing, and then we'll open it up to questions. So if it's submit for approval, these are indications. So I would encourage you to let your clients know that I'm firming it up with a carrier. Here's a ballpark, or don't even give them the number yet. Most of the time, the rates don't change, and if they do, it's not significant. But there's one-off cases that could throw you for a loop, and we don't want to put you in that situation. So if you're going to give them an indication, make sure it's clear that the rate could adjust slightly. And then as far as the bindable, the rates are the rates. It's ready to bind it right here, right now in our portal. So Dave, with that, I am going to take any questions that you guys have and stop rambling on here. Losing my
It's all good.
voice.
It's great information.
I don't talk like this anymore.
It's just again, it's one-stop shopping with this portal. It provides great information and pre-populates quite a bit. I'm curious, Chad, about we get a lot of questions around here about mortgagee changes and who can do those, and I saw that you had that on there. Is that kind of a drop down, or is that it has to be filled in by the agent of who the mortgage company is? How does that process work?
You have to fill it in.
Okay.
So you would click on add mortgagee, and then you plug in the information there, and then we add it to the policy.
Okay. And
then as far as endorsements go, so on our portal, you have the ability to manage policies, and you can go in there and you can request a cancellation. You can pull a deck page, an endorsement, mortgagee change, whatever you need. I will tell you that you're requesting it, so we're doing it for you. So if you need something rushed, you can chat with us, let us know you need it urgently. Otherwise, our team will handle it typically within 2 to 3 days on an endorsement request. But we're doing it on the agent's behalf with the carrier. Excuse me.
Again, there are other players in this space, Chad. Certainly you've partnered with FAI, and there's a reason for that. But if you had to kind of tell our members on the call and those that'll hear this on the rebroadcast, what separates you, FRS, with other providers in this space?
Yeah, I would say just going back to number one is the expertise that we have in this space. Having somebody that you can contact, like, as you know, I'm readily available. I jump on calls with agents, some that don't even have business with us, to consult and help them out with flood risk. So we know the business, and we're easily accessible. I would also say that I don't know of many that are actually a all-encompassing like site where you can quote bind an issue. So this gives the flexibility, to the agents to come out to one system, put in the information one time, get all these different options, and follow through and bind it without having to jump around to different systems. We're also working on, and I'm sure people are thinking about this, like, how do I manage these? Do they download? So we are in conversations with Ivans. We've been in conversation with them for a few months. So we're working on that piece to hopefully offer download in the future to our agency partners.
Yeah, it's funny you mentioned downloads. Had a
Differentiator.
conversation with John Gardner yesterday, and he's a big proponent of Ivans and downloads. So that's good news that he'll hear. Just a comment from our friend Amber said, your team, your underwriting team is phenomenal. So just shout out to your
Thank you,
team,
Amber.
and from an agent that is a big proponent of flood risk solutions. So thanks for those comments, Amber. But I think that's part of the process, right? You're being responsive. You have a expertise, as you talked about, and I think Chad, what also separates you is the time to get back to agents that are in the middle of all this, right? That are trying to educate the consumer, educate the policyholder, and being responsive, I think, is the key. We were just at an event, and it talked about how quickly you get back with somebody, how much a higher rate of binding that policy is. It's really, some of the statistics are crazy.
Without a doubt. I've said that for years. It's actually a very easy business from a marketing perspective. It's called answering your phones and responding to clients. It's amazing how many don't do that. And that is a huge advantage, right? Like having a responsive team, because everything, as we know, with agents, with insureds, it's just everything is last minute, right? They find out the day before they're closing, hey, I need flood insurance. So yeah, we are very responsive. We understand that, some of these things are super time sensitive. So again, I throw out that if you don't get a hold of someone on our team, you call me and I get on it right away. So definitely, we hope that those of you that aren't working with us today, that you'll reach out. We'd love to partner. We don't have specific requirements. We just ask that you give us a fair shot at the business. And the last thing I want to mention is just a reminder that on these large commercial and high net worth type clients, those get super competitive, right? And they could be the deal breaker on you getting the other lines of business. So just know that we have some products that are very competitive that not everyone has access to. So please reach out with those opportunities. We're happy to take a look. Even if you're not appointed with us, we can still get you a quote. And if we find something that is bindable, then we can work on getting you set up.
Yeah. And again, our friend Dave Burt, who's on this call, and I know you work closely with Dave through the program, he appreciates the partnership as well. I think it's been beneficial for our association and other associations through the IMS network of associations and agents around the country. And so Chad's information is up here, folks. He has said this. I think I've counted 6 times. Contact him directly. He's available. He's around. He wants to be a partner with independent agents. He wants to be a partner with agents of the association, FAIA, and others. So use Chad and his 20 to 25 years of experience. You're kind of dating yourself a little bit there, my friend. So let's
I know, right?
let's say 20 years. I think it's a good number for you. But seriously, many of you have met Chad at a lot of local events. You've met him at certainly a convention. You've met him. He's very active in the young agent folks, the arena. And so he's a mainstay at summer leadership. So certainly utilize his talents in this space, partner with him. Certainly IMS is there to be a resource as well. But Chad, thanks so much for this information. I hope, people use those resources that you provided, especially I like the coastal risk.live link, because I think that's pretty cool to be able for those nerds out there that want to follow these storms tremendously. But
Absolutely.
But again, we talk about that, but this is an opportunity for clients to do that and call their agent and walk through what having either it's parametric or a true flood policy is, right? Before landfall. So,
well, I appreciate the partnership with FAI, IMS. You guys are like family, so thanks again for giving me the opportunity to speak today. Great seeing everyone on here, and I hope everyone enjoys their weekend. And again, don't hesitate to reach out if I can be of assistance.
Yep. Well, folks, thanks again, Chad. Appreciate that. I'll say that. Signing off, Dave Newell. Have a great weekend, folks. May the 1st. Enjoy. Hopefully we get some rain around the state for those spring flowers. But again, thanks, folks. And we'll see many of you at convention in just less than 50 days. Take care and have a great weekend.